Welcome back, and joining us on the show now is Amit Goel. He's co-founder and Chief Global Strategist at Pace 360. Amit, hi, thank you so much for joining us. Happy festivities. I want to talk about gold first of all. And while we did see all-time highs in the previous week, we've seen some profit taking. It's kind of flat as we approach the three big events of this week. One, of course, the U.S. presidential elections, the U.S. Fed meeting, and then the China National Congress Party meeting as well. The presidential elections first, and how are you approaching that? What's your sense on the impact on dollar index and the gold prices within this week? A very short-term sense first.
Firstly, thanks for having me on, Manisha. So see, as far as the US elections are concerned, while the world is glued to who's going to win the presidency, what is actually more important is there going to be a clean sweep by the Republicans? So if Trump wins the presidency, but at least one of the, if the House of Representatives, if that goes to the Democrats, because Senate is definitely going to go to Republicans, there is a very high probability that Senate is going to go Republicans' way. So in case Trump wins without a Republican clean sweep, then dollar index is actually not going to go up. Dollar index is probably going to go down. The US bond yields are probably going to go down. And this pressure which has been on the emerging markets in the last few weeks, that pressure will go away. So there is about a 33% probability of a Republican sweep. We all need to be extremely cognizant and extremely concerned about that probability playing out. In every other scenario, my sense is that dollar index is going down, US bond yields are going down, emerging currencies are going to go up, and the emerging market equities are also going to go up in every other scenario. And now coming to gold and silver, I think the path of least resistance in the near term for gold and silver is down because they have outperformed every asset class on the planet in the last about 13 months and also in the last few weeks. They are now significantly overbought in the near term. So my sense is unless and until there is a powerful trigger which catapults them upward, my sense is that gold and silver are probably going to be sideways with a downward bias.
Amit, you said that is a near-term trend that you would foresee into the markets because, yes, gold and silver are overbought, and we've seen prices continue to gain in last many months without a meaningful correction there. But for a longer term, and various global banks and brokerages still believe that once these events this week is done with, next year is still on the bullish side. 3,000, 3,100 in case of gold is something that we still are seeing on charts. How would you look at a longer term scenario then for gold and silver both?
So Manisha, we have been long-term bullish on gold for quite some time now, and we still remain extremely bullish on gold. We believe that it would not be correct to just look at gold for the next 6 to 10 months or even 12 months. I think you need to give it 3 years because on the back of a 55% jump in gold prices in dollar terms in about 13 months, we need to be cautious on gold in the near term. So I would not go on to say that next year we are going to see 3,000 or 3,100, 3,200. But I would say that if you can wait for 2027, then I'm definitely seeing gold above 3,500, probably even above $4,000 an ounce. But I am extremely cautious on gold and silver for the next few months because of this huge run-up, because of this huge outperformance, and because of the fact that a lot of people have joined the bandwagon. And you know that when an asset class, almost there is a near unanimity on any asset class for the next 3 months or 6 months, you know that is not the best of time to bet on that asset class. So we are actually, while we hold on to our long-term positions, long positions on gold, we are actually very cautious on it for the next few months. And we will probably increase our holdings maybe a few months down from now when we believe that a lot of this euphoric and optimistic vibe on gold has sort of already played out, and now the sentiment has normalized and the pendulum may not swing from one end to the other, but at least the pendulum is somewhere close to the middle and not to the extreme right the way it is right now. We will probably add on to our gold investments for the long term. but not now.
So, Amit, when you say that you expect profit taking in gold and silver both, so and you will add as prices do correct, where do you see this correction coming into for gold prices now? And if you look at the next 3 or 4 months, let's say, and we do know that by the time it's Christmas and holidays, there is some, unwinding of trade that happens, and that would lead to perhaps prices decline further from here. So, where do you see that support come in?
Manisha, I would say that the next 6 months is the time when this correction could play out. So my time is about March to April. And my sense is that gold could come down to somewhere in the vicinity of $2,550 to $2,525 because that that there was this stop which was made in July, August, which was at $2,531 an ounce. And gold made several attempts to break that in the next few weeks. There were 5 or 6 attempts. It did not manage to do that. But once it broke through that level, then we know what happened. From 2,531, we went all the way to $2,787 a few weeks back. So my sense is that there is that vacuum in gold between 2,525 to 2,550 levels. I would be very happy personally if we see that price over the next 6 months, because that would be a price where you can go long on gold and sit on it for the next 2 to 3 years, and it will only make money for you.
All right. One final question, Amit, and I want to come back to your first answer where you said that you do not expect a clean sweep in U.S. presidential elections, and that would take the dollar index down. I mean, this is a scenario that a lot of people have been talking about as well, and not too many people believe in the strength in dollar index going forward. So if you are expecting a decline in dollar index, at this point in time, trading between that 103 to 104, do you see 100 breaking, and where do you see prices eventually going?
No, Manisha, we do not see 100 breaking. I think we saw a level of about 100.15 about 2-3 months back. I don't think we are going to see that level anytime soon. So my sweet spot is that dollar index, which is currently at about 103.8, and only on Friday it has made a high of about 104.4. So it has corrected by 0.6% in the last 2 days because the market started doubting the Trump trade, because you know that the probability on the betting sites and the polls, they have been sort of favoring Kamala Harris in the last few days. So dollar index has corrected by 0.6%. If there is no Republican sweep, my sense is that dollar index could come down to about 102. But I definitely do not expect it to go down all the way to 100. But even if it comes down to 102, Manisha, it's going to be great for emerging market assets. It's going to be great for even Indian equities. And I think we are going to probably end the year on a rather more optimistic note in the emerging markets in India, considering that last few weeks it's been a bit of a brutal correction in India particularly, but in the emerging markets in general.
Take that point, Amit. Thank you so much. You and Manisha talking so much about commodities, and you also alluded to the weakness in the equity markets over the last few weeks that we've seen out here. Seems like some of it is coming undone right now. We've seen some recovery from the lows for the Nifty Bank, which has now cut its losses to just about 100 points. So it's an up move that we've seen from the lows on both the Nifty as well as the Nifty Bank. The move on the Nifty Bank and the Nifty can be attributed to HDFC Bank, which is just about moved into the green. Recovery from the lows on that index and the metals index as well, which has now moved to the high point of trade. So we'll keep an eye out on all of this as we progress into the next half of trade. Stay with us on CNBC TV 18.